This is Fintech Insider News. This week, WhatsApp Pay is now available to all 500 million of its users in India. Fintechs are spending more on ads than ever before. And as Bench is acquired by Employer.com, we dive into the future of SME-focused fintechs. We'll be discussing all of this and more on today's show, so don't go anywhere. Hello and welcome to episode 927 of Fintech Insider. I'm Laura Watkins, Director of Media and Marketing here at 11FS. I'm joined this week on Fintech Insider News by three great guests who are here to break down the biggest stories of the past week in fintech and financial services. First up, a warm welcome back to the podcast for Kate Drew, Partner, Director of Research at CCG Catalyst. Welcome back to the show, Kate. How's your 2025 going so far, all 9 days of it?
Thank you. It's going well. Busy, but good. I'm really glad to be back joining you.
Brilliant. Well, thank you so much for joining us. Next up, it's another warm welcome back to the show for Aditi Subbarao, Strategic Partnerships Lead at Instabase. Always great to have you back on the podcast. How are you and how are things at Instabase?
Very nice to be back, Laura. Thanks for having me. Things are really exciting at Instabase. We're finally moving on from all the exploration and experimentation in generative AI from last year onto true business value. So we're working across automation, analysis, and enterprise search with clients to unlock unstructured data. And I've also started working with Raiffeisen Bank, helping them on fintech early stage advisory. So it's all exciting times.
In 9 days, it's impressive. Well done. And last but not least, we have a Fintech Insider debut for Rob Haslingden, Head of Impact Assessment and Engagement at CFIT, which is the Centre of Finance, Innovation and Technology. Great to have you on the show, Rob. Please tell us a little bit about yourself, CFIT, and your role.
Thanks, Laura, and thanks for having me. It's great to be here for the first time, hopefully the first of many other occasions, if I could say that. Yeah,
absolutely.
So I'm a relative newcomer to CFIT. I joined the team in November, but my job is Head of Impact Assessment Engagement. So my job is basically to help manage and deliver the coalitions work that I think we're going to be talking about today, where it's been a busy time. We're very much hitting the ground running because we're just concluding our second coalition and preparing for our third coalition. And in fact, we're even looking further beyond that to a fourth coalition. So a lot going on, and there's a huge focus around small businesses as part of that. So yeah, it's a busy time for us, obviously.
Fantastic. Everyone is hitting the ground running this January. So we have a panel. Now let's get on to the news. So our top story this week is that WhatsApp Pay has now been made available to all Indian users. This story was in Finextra and many other places. Meta's WhatsApp has received approval to make its peer-to-peer payment service available to all 500 million users in India. The service utilizes India's Unified Payments Interface, or UPI, enabling users to send money directly to contacts with ease. WhatsApp Pay originally launched in 2020, but faced phased restrictions, initially capped at 40 million users, then expanded up to 100 million in 2022. But the National Payments Corporation of India, or the NPCI, has now lifted all user caps, unlocking the service for the entire user base effective immediately. So that's quite a big development there. What do you make of this story? Who would like to start?
I'll give it a go. So it seemed to me in reading up on this that this is all happening in conjunction with this postponed plan to attempt to cap market share at 30% and drive, greater competition in the market. At least it seems as though that's the idea. I think from what I have read, it might be pretty difficult. It looks as though, there's already a little bit of a duopoly. Two companies have about 85% of the market currently. And it's unclear to me how many of the 500 million users on WhatsApp, are already using another service. So I don't mean to be pessimistic about the prospects, but I don't know. It seemed like an exciting story, but then the more that I started to kind of like peel back the layers, it seems that it might be kind of an uphill battle for Meta.
Okay, so is your thoughts that like just because 500 million people can doesn't mean that they will, because there are a lot of other players already in this space?
Yeah, and so we don't know, like, of the 100 million, users who could sign up already, right? We don't know how many of them have. One estimate I saw, and admittedly I wasn't able to validate this independently, suggested that they only have, maybe not even 10 million in use currently. So I guess my question would be, how do you you'd have to throw a lot of money at it, right, in order to disrupt players that are already super entrenched in the market?
I have a slightly different take on it. So, anecdotally, and also having used WhatsApp in India and being on like multiple WhatsApp groups with people from India, I completely agree that the first round of payments on WhatsApp, which actually happened for that subset of users a couple of years ago, it hasn't really taken the market by storm. But opening it up to every single WhatsApp user and potentially coupled with some aggressive marketing, which I'm fully expecting Meta to start doing, I do think this is a big thing. And that's because there are two forces at play here. One is just the usage of WhatsApp itself across India. So there are more than 1 billion SIM cards that are active in India at the moment. Everybody has a phone. Everybody uses WhatsApp. And like if my family WhatsApp group is anything to go by, I bet that half the data generated on WhatsApp is like flower forwards of people saying good morning to each other. And it's ubiquitous. Like old people use it, young people use it, family groups use it, businesses use it, butchers, bakers, candlestick makers, it doesn't matter. Everybody has WhatsApp and they use it. So I expect the fact that it is an integral part of WhatsApp for every user is a change, and it's a big thing. And then the second thing is the overall growth of UPI and digital payments in India itself. So digital payments are expected to grow from like 3 trillion in 2022 to 10 trillion in 2026, according to BCG. UPI payments grew at something like 83% in 2023, 50% in 21, and they're expected to surpass MasterCard and Visa by the end of this year. When you put those two things together, then I think the potential for WhatsApp payments to become big is quite high. But to Kate's point, obviously, just because they have it doesn't mean everybody will use it. I do think, though, that once the barriers to entry go down and the feature capability becomes as easily accessible as just launching a chat message, it's definitely going to pick up more momentum.
Rob, what were your thoughts on that?
I'm going to go back to first principles here, because
Right.
I always approach these things from the kind of notion of what's the compelling reason to use it?
Mm-hmm.
Yep. And what makes it differentiated from everything else that's already out there in the market? Start by answering those two questions first, because I think then you have the basis on something which potentially has got legs.
Mm-hmm.
And going back to what my fellow speakers have said, it's kind of like, what is the unique proposition? What's the unique value proposition for WhatsApp that makes it compelling for their audience? That's kind of what I'd like to hear, because as we've heard already, there are other routes through which you could pay. So I kind of like to learn more about it, because I get it in principle. They've got a big audience, but just having an audience doesn't necessarily mean you're going to engage with it. The point about digital payments, though, is an interesting one, because when it was springing through my head is if you could link that through to, say, an open banking method of payment, so pay by bank, where literally it's instantaneous payments with an API connection to your bank account via WhatsApp. That starts to have a bit of traction, a bit of resonance. So it's quite interesting, I think, in that respect.
Absolutely. And Aditi, to your point, we were talking about the sort of two big players that have that duopoly. One was PhonePe and the other is Google Pay. So what's your take on to Rob's point, how they actually break down those barriers and start competing? The kind of the use case that would make you use WhatsApp over either of these other two big names?
So the way I see it is, in general, payments in India is a very hot market. I mean, again, like I don't really have hard data on this, but practically every other Indian fintech is related to payments in some way or the other. So PhonePe, Google Pay are the big ones, but then there's BharatPe, there's Razorpay, there's like so many others, BusyPay and so on, that are doing this. I do think, though, the problem with all of these apps, and some of that also comes towards differentiation, is they do tend to be slightly restricted in the profile or the demographic of their usage. At least for the moment, people who are relatively tech savvy, people who understand instant payments are the ones who are using this or even shuffling from one to the other or figuring out who has better rewards and better connections and lower fees and things like that. The moment you break the financial connotation of the payments app and make it more of a mainstream day-to-day life connotation, kind of like what WeChat tried to do, what Alipay is, once you become part of a process or an interaction which is not necessarily financial in origin, then that is an incentive for somebody to start using it more. So for example, if I'm just wishing somebody happy birthday and then I suddenly think, hey, you know what, I can just send them this gift card, I'm a lot more likely to do that. And if I don't have to leave my medium of engagement and go somewhere else, then naturally there is more stickiness in that. So my expectation, and again, it remains to be seen how Meta does monetize this or actually create this, is because WhatsApp is used for use cases which are non-financial, adding on the financial, it's almost like you're embedding finance in the chat. I think they have a stronger bet at doing those displacements as opposed to other pure play payments players coming back into the space. Having said that, like PhonePe obviously is huge, so is Google Pay. So it's not going to be an easy ask, but they're starting off quite strongly with a good USP.
Kate, you look like you were going to add to that.
No, I'm just curious. Like when you think about how the momentum for WhatsApp was slower in the beginning, do you think that was primarily related to the regulatory constraints, or they weren't going to put, all of the might behind it until they could really run? Or what do you think caused that? I guess I'm just curious.
My take on it would be data concerns. And especially in India, there are quite a few different considerations. One is standard concerns that any regulator would have around data privacy, around security, around anything related to a payments infrastructure technology. But in addition, from an economic perspective, India is a restricted market. It's a restricted currency. There is nothing stopping me from being part of WhatsApp exchanges using an India SIM card. But if I decide to transfer money from a UK bank account using that WhatsApp and that SIM card, the INR is not fully convertible. How do you manage that? So I'm sure there are all of these different considerations that the regulator has to tackle and go through. And Meta hasn't exactly had the best track record in terms of demonstrating data security and regulatory compliance. So I'm sure those were some of the considerations that they had in mind. And even to your point earlier, Kate, I'm sure they're weighing out the problems with a free market and proper competition with all of these other safety considerations. The other thing also, which I don't think as a market India is very sophisticated in, is prevention of money laundering and fraud. Because one of the things that this is definitely going to open up is the moment you put digital payments capabilities in the hand of every user who uses WhatsApp, that user might be an 80-year-old who's never accessed a computer before. It might be a 14-year-old who has no idea how money works and everything in between. So how do you make sure that you're doing this in a safe manner, preventing fraud, preventing any kind of predatory behavior with respect to these users? So I think all of those are considerations which I'm sure the regulator has been thinking about.
Yeah, I mean, that's a great point. I mean, to your point, like around Meta and privacy concerns, in the first place, they've already had a 25 million fine from India over a privacy policy breach. Obviously, keeping users safe when it's open to everyone is going to be a huge concern. Rob, you were kind of nodding along at that point as well. What would you like to add just before we move on to the next story?
Yeah, it was really interesting. A couple of points I'd like to make. I'm putting aside the fact that it's to do with credit. But if you look at look at it. It's slightly analogous to buy now, pay later. But look at the success of buy now, pay later. It was a solution which came at the point at which you're making the purchase or in the checkout, and that was really cute. You would, at the point where you're ready to pay, you had another option, which was pay by Klarna or whoever, but in installments. And it was also cute, the fact that people saw it as a payment method as opposed to a form of credit. But what they did is they secured that position at the point of checkout, which made it feel very natural. So what I'd ask of this particular example is, where is it going to appear in the payment process? So that's the first thing, because the less obtrusive it is, and if you get it right, then buy now, pay later is a great example of how it can be really successful. But going back to the point that was made previously, is then you've got a massive audience, but by virtue of that massive audience, you also open the threat of fraud. Yeah. One of the things that's come out of our work in the UK is confirmation of payee linked to personal identity. And if you can tie the two together, that gives you a measure of security about, making a payment to this organisation or to this company, to this person. If they're a confirmed identity, they do exist, and that account exists, that helps to build assurance around the transference of money between the two parties.
Perhaps that's something that Meta can look at to try and keep their users safe. But yeah, we will have to see how this plays out. I don't think it's probably the last we've heard of this story, or the kind of concerns around it, as well as the success story of having such huge open access to a tool like this. However, while we could talk about this all day, we have other stories to get to, so I'm going to move us on to our next one, which is that fintech ad spending climbs 45% in the last 3 years. Story in payments and other places, fintech ads are on the rise. From subway stations to airport gates, fintech ads have been increasingly visible as companies like Brex, Mercury, and Klarna target major cities such as London, New York, and San Francisco for out-of-home advertising campaigns. According to a recent report, fintechs have ramped up ad spending by over 45% annually in the past 3 years, signaling a shift to reach broader mass-market audiences beyond startups and tech-savvy users. This article goes on to point out that many fintechs are aiming to boost visibility and position themselves for IPOs, acquisitions, and continued market expansion. Obviously, this story appeals to me as a marketer. So with my marketing hat on, this is very, very interesting. But equally, just as someone who regularly uses the tube, you're constantly exposed to financial services ads, from kind of the smallest brands to the biggest ones. Rob, what was your initial take on this? Does that seem surprising in the kind of current economic climate that ad spending should be that increased, or does that seem about right to you?
It's a little bit surprising, because you think about some of the challenges that are facing fintech around level of investment. That's the first point. And then secondly, just the general state of the UK economy. You kind of think, okay, that's unexpected. It's a great example of confidence, though. But if you think about it in segmentation of the market, which are the fintechs that are doing it? So if you take it in the context of, say, Klarna, it seems very natural. They've got to continue to build out their coverage, because a lot of those types of services have been focused towards younger audiences. That's the view. So how are you going to grow and get wider appeal? They've got their coverage across the checkouts and so forth, but they need to build a popular appeal, and it's starting to prove itself as a more popular form of credit across a variety of different demographics. So it feels quite natural in some respects, but I'm not sure if it's ubiquitous across the whole of the fintech ecosystem. Yeah,
it's interesting. Klarna in particular, like sort of we've talked on this podcast about their sort of expanding a lot of their offering so that they don't want to just be a buy now, pay later option. They're trying to make themselves almost like a lifestyle brand, if anything, so that this kind of out of home campaign, as you say, sort of makes sense for someone like them, and equally maybe on the kind of IPO positioning as well, kind of getting that sort of household name status definitely helps. But for others that are maybe just starting out or have a different proposition, like that increased ad spend is actually quite surprising. Kate, what was your take on that?
I mean, I would agree. At least in the US, we're seeing it primarily from the big established fintech brands. So think Chime, for example. Chime just launched, which is one of the biggest neobanks or digital banks in the US. They're not actually a bank, but they essentially launched this campaign to promote their early wage access product. And the idea behind it is, unlocking pay across America. So they have a vault the size of a semi-truck that is driving across America with a QR code on the side of it. And anyone who scans the QR code can potentially win, I think, like $500. It's a big cash giveaway. So, we're starting to see some of these like bigger companies like really, really doubling down on their mission. And, they have the money to do it because they've already established that success. Whereas to your point, I think for a smaller fintech, and for probably the majority of the fintech ecosystem, that kind of marketing is going to be a little bit out of reach.
Yeah, definitely. And so many of them, some of the, well, particularly for a UK example, a lot of the early stage fintechs sort of targeted that tech savvy, digital, London-based niche to kind of break the market, so to speak. And then now they're obviously doing much bigger campaigns to establish themselves, to grow. Monzo's done sort of TV advertising, as has Starling. Revolut just did an enormous campaign to celebrate 10 million customers in the UK. They had like a whole event and loads of amount of tube advertising that went around that and so on and so forth. But do you think the prevalence of that kind of huge paid campaigns perhaps makes it harder if you're a smaller one starting out and your competition is so much more well funded and able to do this? Aditi, what's your thoughts?
So I think there's two considerations here. One is, like Rob and Kate mentioned, what is your target audience and what is your identity, and therefore, like, should you or should you not be marketing? And one of the interesting things which even at Instabase, as a B2B company predominantly, what we have experienced and what most schools of sales will teach you is that ultimately the buyer is a person. So whether you are the CEO signing an enterprise check for a multi-million-dollar, 10,000 people corporation, or you are an SME owner of 3 people buying it for your own business, when you identify with something, when you read something, you're a lot more likely to buy it. So what we are seeing happening in some cases is even B2B fintechs, or even people like Wise, for example, who are trying to grow out their business segment and their commercial offering, are still advertising to the consumer segment to build that brand recall and that identity and that customer familiarity. That's one piece of it. The second interesting piece, which is to your point, Laura, on the funding and the size, I wondered if any of you have seen this recent campaign by Yonder, the credit card company. So Yonder is like credit cards that focus on better rewards management and free travel insurance and all that sort of stuff. They went head-to-head against Amex, and they've got ads over the tube where Amex will talk about benefits of membership and rewards. And right next to them, you'll have an ad from Yonder saying, do you even remember when you used your points last? And they've done this in multiple different places. So it's a classic kind of David versus Goliath story, like the underdog going against the big name, but being cheeky about it and using that little freedom that they might have as flying under the radar to be able to go back. Apparently, they tried to sponsor Wimbledon, were refused. And it seems, at least this is what social media says, it seems Wimbledon told them to get in the queue. So what they did was they sent people wearing Yonder outfits to stand in the queue for tickets outside Wimbledon, giving out strawberries and croissant. And they're like, Wimbledon told us to get in the queue. Here we are. And I think some of these things, it's almost like the smaller fintechs have the license to be a bit more creative, have the license to kind of do non-traditional.
Yeah, I totally agree. That kind of like fun guerrilla marketing, I think, is kind of like budget-friendly, creative fintech marketing at its best. However, you can get it wrong. And so you have to stay on the right side of the regulators. We've seen a few crackdowns in the last year, even from some of the biggest brands who've got this wrong. So Nationwide had to have one of their adverts pulled for misleading customers. This week, an advert that was slightly controversial from Wahid Invest was banned for featuring US and Euro banknotes on fire. Rob, what's kind of the pitfalls of falling foul to the regulators? How careful do you need to be? And is there an argument that kind of all press is good press or no press is bad press? Like, if you're making headlines, are you still doing your job?
Yeah, I've had that school of thought throughout my career that any sort of press is good press. I'm not necessarily convinced by that, to be honest with you. You've got to look at it in the context at the time. I think about this from an investor point of view. Sooner or later, the difficult conversation comes as you've spent several million here. How many new customers have I actually acquired? And what's the potential lifetime value of those customers? And yeah, it creates a lot of noise for a short period of time. But if I'm paying the salary at the end of the day, I want to know what's the return on my investment.
Yeah.
And some of these have got deep pockets, clearly, because they're well established, as Kate mentions, they're well established brands. But I think it's particularly challenging for smaller brands that are trying to get some sort of foothold in the market. It's not a negative look in the context of the UK, but it's a difficult market for those brands at the moment. And so I think there's maybe a divergence emerging here. Fintech's a fairly broad term. We need to think about, as I said before, in terms of it's the bigger players versus the smaller ones. And is this a trend which is purely being driven by bigger players as opposed to smaller ones? It's not ubiquitous. It's not reflective of the whole of the market.
No, but it is similar to sort of the kind of the adage around big banks having to spend more just to keep the lights on. It feels like, to your point, they're almost doing the same thing on marketing. Like they sort of just have to keep up a marketing presence. Does it make a difference? Does it give them more customers? Are people switching from, I don't know, HSBC to Nationwide because Dominic West was in their ad? I don't know. Like they don't publish those numbers.
There's an interesting dynamic to this, though, isn't there? When you hear established bank customers saying, I don't want to engage with you digitally. I want to have a presence where I can go in and speak to somebody face to face. So there's an audience out there that don't want to engage with fintech brands because they don't want to engage digitally. They want to have a service which, yes, you've got an app and I could talk to you or deal with you online, but at some stage I want to go and have a face-to-face conversation. And I look at it in the context of, we're going to talk about later on in terms of SMEs and so forth. That's one of the concerns that SMEs raise on occasion, small businesses. I can't talk to a person. I don't want to talk to a person. So this is one of the dilemmas. Fintech push hard in terms of spending loads of cash on this sort of thing, but they're fundamentally digital applications. They're digital apps. Yeah, they're not. There's no bricks and mortar there. So remember that. What's the audience they're going to attract? That there's a finite size of that audience, and there's still a large proportion of people who don't necessarily want to interact with digital all the time.
Yeah, definitely. And sort of to your earlier point, Kate, telling people the truth about who they are and what they are. So, Dave has been sued recently for misleading customers over an advance. Like, kind of, we said it jokingly at the top. I don't mean to call you out, but like Chime got told off because they said they were a bank and they're actually not. That kind of thing. What's your stance on that?
Right. So, yeah, I probably should have clarified in that point that pretty much all, or not all, but a good number of the neobanks or digital bank brands in the US are not actually banks, right? They partner with financial institutions to provide financial services, and they're essentially, they're providing the customer experience, right? And Chime is probably the biggest example of that. And so as a result of that, there has been a lot of getting into trouble from a marketing perspective in the US when it comes to these companies, because it's really hard to advertise financial services or banking services without giving the impression that you are a bank. So Chime in particular has gotten into trouble on that front, but also, to its credit, it's been able to kind of weather that storm. It continues to push very aggressively on the marketing front, and it's appears to be headed for an IPO. So I think there are some companies that have been able to navigate it, but that's in the U.S. market. It's a really tight line to walk.
Absolutely, and I think I don't think that'll be the last headline we see, like that Dave example of sort of crackdowns on slightly misleading advertising. But all in all, I think, it's going to be, if 2025 is anything like the previous 3 years where ad spend has continued to go up and up, I think, we're going to continue to be bombarded by financial services ads and so on and so forth. But we'll just have to see who gets it right and who gets it wrong. But on that note, we're just going to take a quick pause here. Back very shortly. Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off. Welcome back. Before we get back into the news, we wanted to tell you about our latest Insight Show. It's that time of year again where everyone is making their bold predictions for the year ahead, and here at 11FS we are no different. I'm joined by Fintech Insider's David Breer, Ross Gallagher, and Dave Morris as we make some bold claims for the year ahead, as well as assessing how right or wrong we were this time last year. That episode is out now. To tune in, just head to the podcast below this one in your feed. Right, back to the news. And our next story is that CFIT secures strategic industry partners for 2025. This story was in Fintech Finance and everywhere else. The UK's Centre for Finance, Innovation and Technology has secured key strategic partners, including big hitters MasterCard and Lloyds Bank, to support its next coalition launching in Q1 2025. The latest coalition will focus on advancing solutions to improve access to finance for the UK's 5.6 million SMEs. Potential plans include developing solutions such as an SME digital finance education tool, a digital marketplace, and innovative supply-side proofs of concepts such as an SME resilience index to support more informed lending decisions. The coalition also marks the start of CFIT's hybrid model, where publicly and privately funded coalitions will run simultaneously, enabling it to diversify revenue sources and scale impact throughout 2025 and beyond. Of course, we are joined by Rob, Head of Impact Assessment and Engagement at CFIT. Congratulations, firstly, on acquiring these fantastic partners. What more can you tell us about this coalition and your plans for it?
Thanks, Laura. So firstly, a big thank you to MasterCard and Lloyds Banking Group, because obviously that's a fantastic sort of measure of confidence in CFIT and our ability to deliver. And it's a testimony to the work we've done so far. It's also important to remember that we've not been going very long. We're quite a young organisation. So the fact that they've put so much commitment behind us and been prepared to back us in the way that they have is great. It provides us with a new challenge, but we're looking at a consistent theme, which is SME finance, and this is one of the things we picked up in our first and second coalitions. And the reason why we're focusing on it is one word really, and that's growth. We know that in the context of the current government's agenda, that's very much front of mind. And the exciting thing, there's a lot going on, particularly in terms of data, which is obviously the area of focus for CFIT. We're supported, we're supported by HM Treasury and the City of London Corporation. So that was the basis of where we started. And we were given a specific remit around using smart data, using data to drive innovation. And that's the basis of what we've been trying to do throughout our work. So there's a lot going on the data horizon. So if you think about what's happening in terms of the Data and Access Bill, the implications that has for releasing new data sources, that's really interesting. And most of the work we've been doing today is focused on looking beyond the existing data sources in the market. And let's be frank about there are limitations in terms of some of that data. And looking at how new data sources could be used to augment that and then drive new solutions. And the word coalition is really important as part of that, because what we try to do, or what we endeavour to do, is bring together a cross-section of industry. So where we're quite unique, I think, is that we bring together industry, government and the regulators. And when I talk about industry, I mean both established financial institutions and fintech. And that allows us to capitalise on best practice and also then to get a shared ideas and to leverage that expert thinking to generate those ideas. So that's really exciting. And that's where I think we sit uniquely in the market. So yeah, it's an interesting time at the moment.
Wow. So can you tell us a little bit more about the focus on SMEs and this particular coalition, the access to, and the kind of leveling up of access to finance, and why this was like the key focus of this particular coalition?
Yeah, I mean, I guess I go back to the point I was making about growth. So it was seen as an area that required further attention. So look at things like commercial credit data sharing in the UK. There are deficiencies there. The market's evolved. There's a shift in terms of where the majority of lending is taking place. So that's an area which is due attention. If you look at the bank referral scheme, the number of SMEs that go through the bank referral scheme and still don't get access to finance, that's quite worrying, we think. And then there's opportunities to look at that and change it. And we think that data could play an important part in terms of changing people's perception. The other thing that we need to do is to help lenders understand more about SMEs, because one of the criticisms, over 2/3 of SMEs say that banks don't really listen to them, don't understand how they operate. So by pulling together a variety of data sources which demonstrates how resilient or creditworthy they are, using a variety of new data sets, we think that could improve lenders' understanding of their financial stability and therefore improve access to cash and release of funds to support them.
Fantastic. Aditi, I can see you nodding along there to Rob's point about the struggles that SMEs have and that kind of sort of emotional response that banks aren't really listening to them. What do you think about that? It seemed like you were sort of emoting along with
Yeah, and actually, like the reason for the strong impassioned reaction was because a lot of the work that I've been doing and Instabase has been doing has been focused on commercial lending for the last year or two. And this is because there's two perspectives to look at this. One is from a bank's point of view. Until fairly recently, the risk-reward ratio just didn't stack up for lending to a small, new, relatively unknown SME. You had no way of credit scoring them. They didn't have enough history. They didn't have enough track record. You could not fit them into a standard credit scoring and pricing model to then justify why you are using your capital against them. It perhaps didn't even make sense for the rest of your customer base. So you had a duty of care to those people not to let their deposits get jeopardized. So I can see it from the bank's perspective. For an SME, obviously, that is extremely disappointing because if you don't source capital, what are you going to do? The point that Rob made, though, is critical in all of this, which is it all comes back to that data. And we are now in a world where data sources which were previously inaccessible or locked away, or even if you did access them, you had no way of actually processing and analyzing them to then use them in an underwriting process. All of that is now gradually starting to open up. So with the advances in AI, with the advances in analytics, with the advances in just pure computing power, we can actually make sense of all of these data sets. We can potentially even model outcomes and scenarios and probabilities of default and all of that in a much better way that we could before. And therefore, that is making a lot more people open to it. And I think for all its evils, the one thing that COVID did was because all of the government support and the initiatives that different governments across the world put together for small business support, I think that has definitely kind of given an impetus to SME lending. And I'm really optimistic that it's going to increase. And obviously, the work that Rob is doing and all of those kinds of coalitions are important because that's the other consideration here. What we have also seen happening is that it's not just the traditional lenders anymore. You have alternative sources of finance. You have asset management clients who are doing direct lending. You have non-banking financial institutions who are coming in. And all of those things working together, hopefully, will make this a much better ecosystem to channel money where it deserves to go.
Absolutely. And Rob, can you kind of maybe double down on that point around the kind of necessity of coalition, the necessity of the industry kind of teaming up together to solve a problem and how much more important that is than, kind of banks or institutions working in isolation?
Yeah, it's a really good point. And I think that's what we've been pleasantly surprised about is people's willingness to want to work collectively to solve the problem. Aditi made a really good point. So to be fair to our banking coalition partners, one of the things that they've been saying is that there's not enough data available on particularly small businesses, micro businesses, and the ones that are first getting started to help them. So what data could be made available and how could banks help themselves with that data, but also how could we help SMEs to position themselves more appropriately to lenders? There's definitely a shift though, because we've seen it in some of the data. So 55% of loans now are being provided by alternative lenders who are prepared to take the risk, not mainstream banks. And I think, to be fair to the banks, they're looking to try and respond to that. But by bringing together the coalition of fintech, established players, data experts, but then also looking at the context of government, because let's not forget that one of the catalysts for this is that government is looking at how we can open access to government data sources to actually support this exercise. So things like information held at Companies House and the Companies Register or HMRC data, those sorts of things, which, to Aditi's point, have not been available until recently and are really important.
That would be huge, right?
Exactly.
That would make a massive difference.
Exactly. So credit where it's due. It's almost like a perfect storm of trends coming together, which is supporting it now, which I think is why there's so much excitement about it.
Definitely. And Kate, just to bring you in, does anything like this exist in the US? Is there sort of similar coalitions or kind of companies having to go it alone to solve some of these problems for SMEs?
No, I would say, maybe there are, right? But it's a lot more fragmented. I think that there are some interesting collaborations between established companies, though, and the fintech ecosystem. For example, Visa's Fast Track program is a really good example of an established fintech company that is trying to provide access to the payment ecosystem to, a wider swath of fintech companies. And then probably, another example is really just the world of embedded finance. As I was mentioning earlier, a lot of the financial services that are provided through the fintech ecosystem in the US are done in collaboration with established financial institutions. And I think we're also starting to see a lot more, because at the end of the day here, there's many financial institutions. It is a very fragmented market, and those institutions have the customer relationships in a lot of critical communities, but they're struggling to serve them, especially when it comes to small and medium-sized businesses. So to the extent that fintech providers that have the technology that are able to solve the data problems can kind of come in and help to better serve those customers through the established providers, is also something that we're starting to see a lot more of, as opposed to just, strictly acting as competitors.
So just to add to that, I think one of the things I would say that one of our partners, MasterCard, has been doing work on in the States around business resilience. And what we're hoping to do is for them to bring some of their learnings from the States into the UK market and look at how applicable some of that insight might be to support us in terms of the objectives we set for this next coalition. The other interesting dynamic in terms of the US, which I think could be worth keeping an eye on, is the implications of open banking in the US as that data starts to trickle out into the market. We know that there's been screen scraping for quite some time, but it'd be interesting to see how, as that opens up, how that impacts on the SME market and wherefore it encourages more lending to take place or not. Because I think, to be fair to say, that in the early days of open banking in the UK, SME lending didn't get a kickstart by virtue of open banking data being released into market.
Well, huge, exciting times ahead. Well, thank you so much for joining us and telling us about it. And please do come back and tell us more about it as it all unfolds and you start to see the outcomes and the results.
Thank you. Absolutely.
But sticking with the theme of SMEs, our next story is actually a combination of two stories we picked up on the world of SME banking. So very much sticking with the theme. So the first one is that Employer.com buys Canadian fintech Bench Accounting for an undisclosed sum. And equally, that SC Ventures launches invoicing and billing fintech to SMEs in APAC. So both these were on Finextra. Bench, a US accounting startup, abruptly shut down right after Christmas, locking hundreds of customers out of their accounts right as the tax season is set to begin, and also laying off its 600-strong workforce. However, in a last-minute U-turn, it has now been acquired by Employer.com for an undisclosed price. Quote, Employer is a brand new company specializing in HR and workplace tools who hopes Bench's tax and accounting solutions will add to Employer's existing payroll and onboarding tools to support American SMEs. Bench now finds itself in a situation where it's actually trying to rehire many of the team it just let go. On the other side of the world, SC Ventures, Standard Chartered's investment arm, has launched Labamu, I hope I'm saying that right, an invoicing and billing platform for SMEs in APAC, starting in Indonesia. Following a successful incubation period where 80,000 SMEs expressed confidence in the platform, it will offer SMEs digital billing, catalog stock and material management, plus customer relationship management and reporting services. And the financial services solutions are embedded bank accounts with plans in the pipeline to add procurement and working capital financing to the platform. So all told, plus Rob's news, quite a big week for SMEs on both sides of the Atlantic. Kate, what was your initial take on this? Are they kind of, from all the conversation we've been having, are the needs and limitations of SMEs the same the world over? Do they sort of all have the same things in common? What's your take?
I think there's one critical thing that both of these stories have in common that SMEs globally have in common, which is the need for services bundled together beyond banking. And we're seeing, a lot of the bigger companies really begin to hone in on that, which is great to see. Like Square is a really good example of providing, in addition to providing, financial services now to their merchants, they're also providing things like email marketing, payroll, billing, accounting. These are all things that, are critical to the ability to run a small business, and are very hard to get and manage, especially for small teams from many, many different places, right? So I think of this usually as like the flip side of embedded finance, right? Embedded finance is all about embedding financial products into channels that are typically non-financial. This is embedding non-financial products into channels that are mainly financial and enabling small businesses, small and medium-sized businesses, to get more of what they need in one place.
Absolutely. And what was your take of the bench switcheroo situation? A rapid shutdown and then an immediate opening back up as soon as they got acquired. How sort of, what's the impact of that, and how sort of damaging might that be?
I think, if I'm being totally honest, my initial reaction was, oh, but then, I thought about it for a second. I'm like, you know what, this happens, it happens. And I think probably because of how quickly, they managed to kind of climb out, it probably will end up being all right from that perspective. But I think the idea behind employer.com and trying to kind of combine all of these different solutions into one sort of super solution is promising.
I would agree with that. I also think there's a slight geographical flavor to it. I have seen far more horizontal platform creation happen in the East. And if I consider London as sort of the center looking both sides, the US tends to specialize in vertical solutions a lot more. And Asia tends to go horizontal, provide one place where everything happens. Obviously, those trends will start converging very soon because, exactly to your point, Kate, an SME needs all of this. They don't want to go contract with 15 different people. But at the same time, the other thing that the bench story illustrates is that risk of having all your eggs in one basket. Because let's say you were an SME, you did everything on bench, and suddenly they tell you at year end that they're going to stop operations. You don't necessarily have enough redundancy in the system and enough backups to fall back on. So I think the other part of this is, how do we make sure that there are enough safeguards? How do we make sure that even small SMEs do have the capability to make sure that failure of a certain company does not cause an entire fallout on their business? And this is not restricted to the fintech world by any means, but it's just something to be aware of, because it's the one space where SMEs tend to say, well, I'm working with this payment provider and I'm working with that card provider and that's all I need. But actually, maybe you don't. So that's also another thing about this that struck me.
That's an interesting point. That one's almost a cautionary tale for the other, to make sure that you're like a little bit cautious of putting all your eggs in one basket in case that basket happens to collapse right after Christmas. Rob, what were your thoughts on that, particularly this kind of super solution that is being created for SMEs by employer.com?
Yeah, it's interesting, isn't it? I mean, my first question is, did they keep the lights on? So if there was no loss of service, then you think, oh, well, that wasn't too bad, was it? So that seems fine. So that retains the confidence of your audience. On the kind of supersize point, though, it's really interesting because it's very analogous to an exercise that we did in our second coalition when we were creating a digital identity for a company. in a digital wallet. And we thought about which brands are probably best placed to actually offer that service to SMEs. And you naturally migrate to the accounting software providers or the likes of Sage, QuickBooks or whoever, who have an established relationship with an SME. And it's a value-added product that you add into their raft of products that you provide out to the SME. And you've already got an established relationship there. So you've got a measure of trust between the two. And therefore, it seemed very natural as a way to drive the company digital identity to wallet. To Aditi's point, though, I do accept it. SMEs are no different from big corporations. There's an argument for spreading risk, and therefore you are putting your eggs all in one basket with one platform. And I have to admit personally, I wouldn't necessarily want to do that. So there's always that challenge, and we shouldn't look at SMEs as any different from large corporations. Spreading your risk is not a bad thing, and having a dependency upon a single supplier is always a danger in that circumstance. So absolutely. If they kept the lights on, though, does it matter? I mean, and they've continued to grow and they've got the investment. Does it matter? That's the point.
I don't know if they did, though, because there was a lot of kind of newspaper print around like these companies who were left, stranded, trying to get hold of them. They got bounce backs on emails. They just could not get hold of the company. So from a customer service perspective, I don't think it went down too well.
In that case, then, I would agree. Then it would be worried. To say the least,
One of the things that I found interesting, especially in the Labamu story, is there's a whole list of capabilities that they provide and functionality that they provide, but they're also providing training. And
Yes,
that
I
was
loved
the
this
part
point
that
as well.
I found most interesting, which is that they're actually helping these SMEs understand how to manage the finances of their own business and how to run their own businesses. And especially in emerging market economies, where you might have people who come from no business background whatsoever, who are starting off their first initiative, their first enterprise, having a full-fledged support system that teaches you all of that and walks you through it and supports you as you build out your own business. There is no better way to build differentiation and loyalty and actually do some good while you're earning money. So I found that part quite interesting. And if only more fintech started doing that, I think that would be something to emulate for sure.
It's a really good point. I mean, I'd completely agree with that, because that's one of the things that's come out of our research, the need for organizations to spend more time coaching and helping SMEs, because we've talked about the level of financial literacy generally across, the UK population. And these people, they're individuals, but they're also running businesses. So they carry that level of illiteracy, if you pardon the phrase, into running a business. So any help you can give a small business through sometimes some of the simplest things, but particularly around understanding their financial data and how they can improve, how they can access to credit to, improving their score or whatever it may be, their credit score, for example, it's really important.
Yeah, definitely. Because one thing to have the tool is another thing to know how to use it.
Exactly.
And I particularly like that point on this story. And also they were doing a huge amount of work specifically on female entrepreneurs as well, to try and grow their confidence in kind of running their own business, which I thought was really, really interesting. But on that, just to give you the final word, Kate, on that kind of value add of, the kind of education that goes with the product, are you also in agreement that this is kind of the way to get your product across, to kind of build trust with the target audience rather than just giving them another product?
I completely agree. I think that's not necessarily specific to SMEs, though. I think it's true across financial services. I mean, any financial services company is essentially selling trust, right? Like that's what you're selling. Like you are, the center of you have to be the most trusted party for the small business, for the consumer, for whoever you're dealing with, because you're holding their finances. So I agree completely. Like, in order to do that, education is a huge part of it, because how do you build that trust with someone who doesn't even really completely understand what they're trying to accomplish?
100%. Okay, now for a quick look at one more news story this week that we don't have time to cover in full, which this week comes from the world of football. So Turkish Super League football club Besiktas enters the world of fintech with new super app. So Besiktas, who are one of the country's big 3 football clubs, has made history as the first sports club in Turkey to launch a startup with the Besiktas Super app. In just 40 days, the app has achieved 900,000 downloads. The app offers fans of the Istanbul-based Instabase Club features like digital payments, QR transactions, and exclusive e-commerce options. Users can also enjoy 5% cashback on payments, and upcoming features include credit, services, and travel. Fans of the club from as far away as Frankfurt, Baku, Amsterdam, and Paris have signed up. The average user age is 31.2, and their oldest fan is an inspiring 95 years old. To find out more about this, we spoke to Hande Oztek, who is head of digital at Besiktas.
The Besiktas Super App is a groundbreaking initiative, being the first startup launched by a sports club in Turkey. Since its launch just over a month and a half ago, it has already achieved remarkable milestones: 900,000 downloads, 550,000 registered users, and 300,000 open wallets. While typical sports club apps offers features like merchandise stores, match centers, exclusive content, and ticketing, the Besiktas Super App takes it a step further by seamlessly integrating fintech capabilities. Users can easily open wallets and issue virtual or physical cards within seconds. In just a short time, the app has gained 120,000 card users who are already enjoying a 5% cashback on their purchases. The app also offers a wide range of financial services, including QR payments, transfers, bill payments, and precious metal trading. Additionally, insurance products are available on the platform. In collaboration with Ishbank and MasterCard, the app will soon launch its credit card in Q1, while loan applications are already accessible to users. The Super App has gained popularity beyond Turkey, with significant downloads from Germany, the Netherlands, France, the UK, and Azerbaijan. Looking ahead, Besiktas plans to expand its embedded finance offerings to better serve its global fan base, making it a true innovation leader in the sports and fintech space.
There we have it. So we wish them all the best, and we'll be keeping an eye on that one to see how they progress. And finally, something a little bit more lighthearted to end the show on, which is our 2024 FinTech resolution. So not predictions this time, resolutions. So as this is our first news show of 2025, we wanted to start the year right with some FinTech New Year's resolutions. It's the time of year where people will be making plans to drink less, spend more time exercising, or promising to go on that trip they've always wanted to go on. But what do we really need to stop or start doing more of as an industry this year? And we put this to our WhatsApp community, and some of their suggestions were as follows. So fintech should be leading our sector when it comes to promoting sustainability and fighting climate change. They've said we need to get better at collaborating, which, Rob, hopefully you're leading the charge on there. As an industry, we should use less acronyms. And equally, I totally agree with this last one. We all need to spend less time on LinkedIn. So, panel, what's your thoughts on this? What should fintech's New Year's resolutions be? Do you agree with that list? Anything you want to add to it? Rob, let's start with you.
Yeah, that's a good list, isn't it? I'm going to pick on the ESG green thing because that feels to me like it's dropped off the radar a little bit. Yeah. And that worries me a little bit because we've got an agenda clearly around wanting to shift to net zero.
Yeah.
How are we going to do that? And I don't see a huge amount of progress being made on that. And the government's got a big commitment to get us there. So, yep, I think if we can get behind that, that's really important because clearly it's not just about finance, it's about our environment as well. So I would like to see definitely more impetus, more progress in that area.
Definitely. As this week of all weeks as well, when there's various kind of climate emergencies happening in various parts of the world as well. That's more important than ever. Kate, what was your thoughts?
I think we should agree to stop putting AI in company names if it's not central to the business. And I know that sounds funny, but I actually think this is important because it's confusing people and it's confusing customers. And I think we should all make a commitment to each other to stop doing that.
I love both of those. And yeah, I just read the news about JP Morgan backing out of their net zero commitments and all of that. So it's going to be a difficult time for poor Mother Earth. But I'm going to take a slightly different tack on my resolution. And in fact, the first time I said it was actually on this show. My ask of the industry is my favorite F word in fintech, which is fund more female fintech founders. And I think we don't do enough of that. We need to keep doing more of it. And that's the horn I'm going to keep tooting. But yeah, I think it's going to be an exciting year. So let's see how all of these things shape up.
100%. I think that's a great crop of resolutions. I think equally for me, I mean, I was sort of joking around spending less time on LinkedIn, but I think sometimes it can be too much of a sort of echo chamber. And the kind of what the industry does best is partnerships, it's collaborating, it's opening doors, it's talking to the right people, it's the power of network and that sort of thing. I think it is really just doubling down on that and not just sort of, believing everything you hear and read on LinkedIn as just like one echo chamber of the industry. Does anyone want to share any of their own resolutions? We've done what the industry needs to do to sort itself out. Anyone want to share their particular resolutions, either for their roles or anything else they want to share?
That's a good one, isn't it? I think, should we make it personal or what? I mean, I think I'd like to just keep on saving more, quite frankly. And just,
yes, when we all...
Particularly in the current climate, just find time to save a little bit more. And the bits about your pension as well, investing in your pension, getting measured. Because again, going back to financial literacy, we've got a huge problem around people actually having the right pension provision in place to be able to make sure they can look after themselves when they get older. It feels like, again, it's another neglected area.
Yeah, and I think that I'm equally sort of, I work on this show and fintech all day, every day. Am I that great at organizing my own finances? So probably not. So probably my lesson should be doing things like that, sitting down, making sure I know what's going on with my pension and, how it's being invested and all those kind of things.
It doesn't sound very exciting, does it? But it's one of those essential things that you need to get around to.
100%. Kate, Aditi, any additions?
I'm very similar to you, Laura, in the sense that I'm supposed to be working in this really high-tech company and all my notes are on paper and pen. So my resolution is to go digital on my notes. So if anybody has any suggestions of like the good apps that you use, or if you have a remarkable tablet lying around anywhere spare, please send them my way. And professionally, I do want to start doing a lot more work on the Raiffeisen fintech side of things that I've just taken on. So if there are any founders that are fundraising, and especially if you're a female founder, please do get in touch with me. Would love to see how I can amp that side up.
I am going to try and meet people more often in person. I work remotely. Yeah, and it's wonderful to be able to talk with and work with people all over the world, and I feel like that is what remote work has given us. But I think it can lead me to seeing people less often, so I'm going to make more of an effort to do that.
Do we think the drive to go back to the office will encourage more people to see each other face to face? I don't know.
I don't know. I feel like giving people the choice is probably the most important thing. I think people are more likely to resist it if it's forced upon them.
Yeah, I'm just thinking about obviously Amazon and pushing their staff back to being in the office 5 days a week. Does that mean they'll get together more face to face?
Well, I mean, I guess they will if they're forced into an office together. Whether they enjoy it and want to spend time with each other outside of that, who knows? Okay, on that note, that wraps up this week's Fintech Insider News. Thank you so much to today's guests. Where can people find out a little bit more about you and your companies, starting with you, Kate?
You can find me on LinkedIn, and you can find all of our research on ccginsights.com.
Thank you. Aditi?
You can find me on LinkedIn, and Instabase is on www.instabase.com. You can even try out some of our AI solutions there yourself.
Brilliant. And Rob?
Likewise, you can find me on LinkedIn and go to the CFIT website. It's all there. It's full information, all our coalitions, the progress we're making and the impact we're having on the ecosystem. So, yeah.
Brilliant. Thank you. And as for me, you can find me, Laura Watkins, on LinkedIn, of course, 11fs.com, or this very podcast. So thank you so much for listening to today's Fintech Insider. If you like what you've heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or friend? And as always, if you want to join the conversation, find us on social media. Just search for 11fs or Fintech Insider, or send us an email, podcasts@11fs.com. Thanks again, and goodbye. Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing Trust Center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.